So here are 4 stocks that I would gladly buy and hold forever. All right, so that first stock on the list would be Mastercard. So how do I decide which stock I would buy and hold forever? So for me, the first factor I look at is, as a consumer, do I use it? Do I like it? Do I trust it? So Mastercard is definitely a product that I use. I love their credit cards. In fact, I even like them more than Visa. Nothing wrong with Visa, but I just have a preference for Mastercard because the rewards programs is always better in my opinion. It always suits me. So I love Mastercard. It's a product that I always use. I rarely use cash. It's been over maybe 3 years I've used cash, unless the place doesn't accept credit cards. I mean, they make purchasing easy on the consumer and they make sales easy on the merchant as well. They're like a middleman. It's amazing. It's an amazing business model. They pay dividends, not so high, but they're paying dividends, and their dividends is increasing year after year. Market cap of 313 billion. That's amazing. If you look at the chart here, and if we look at Max, you can see that it's a chart that goes up like an arrow. I mean, look, in 2004 it was trading, or 2006 it was trading at around $4, and right now it's at 311. So you would have made 77 times your money if you had bought it in 2006 in about 14 years. That's ridiculous. And if we look at the dividends, 40 cents in 2020, and if we look at 2010, 15 cents in 2010. So almost tripled the dividend in 10 years. So great dividend increase year after year. And if we look at financials, revenues, for me it's important that revenues are strong and growing year after year. And here you could see that in 2016, 10 billion, 2017, 12 billion, 2018, 15 billion, 2019, almost 17 billion, and in the last 12 months, 17 billion revenue. And if we look at profits, you could see that profits grow as well year after year. And if you look at 2019, that's 8 billion over 16 billion of revenue. That's like almost 50% net profit. That's amazing. That's a crazy margin. So I don't know what the future holds. I'm not good at predicting the future either. I don't know if Bitcoin can affect Mastercard or other payment processing companies. But what I do know is I'm pretty sure that Mastercard will figure something out if that happens. And I'm sure they're already thinking about it. And so I trust in their ability to innovate and get over obstacles. I don't have to predict anything, but there's a proven track record enough for me to trust. And as a consumer, I'm happy with the product, so I know they'll be around for a while. In fact, I already own 6 shares of Mastercard at an average price of $275 in my RESP, and I don't plan on selling it before 15 years. Now, the other stock that I would gladly hold forever is Costco here at $312. Now, sadly, I bought Costco at $150 a while back, but I did the stupid, silly mistake of selling it at $165 because at that time I was swing trading. I didn't have that mindset of buying and holding. So I made my short-term profit, but definitely regretted it when Costco is right now trading at $300. Not only that, but in the March 2020 crash, Costco didn't drop that much. It rarely moved. So that's really a sign of strength. So definitely regret not being a long-term investor in Costco. And their dividend as well increases year after year. They've got 137 market cap, and let's look at their dividend increase. So they haven't been paying forever, but they started in 2004 about. So 2004 they were paying 10 cents in dividends, and right now they're paying 70 cents in dividends. So that's 7 times increase in about 16 years. So that's almost 37% average increase of dividend in the past 16 years. That's amazing. Now let's look at revenues. So in 2016, 118 billion in revenue. 2017, 129 billion in revenue. 2018, 141 billion in revenue. 2019, 152 billion in revenue. And last 12 months, 160 billion in revenue. What more can I say? But their cost of goods sold must be high because they're basically just selling products that they're buying. So if we look at net profit here, let's look on this chart. Yeah, you can see net profit is pretty low. But so last year, 2019, 3.6 billion net profit. So 3 over 152 is probably not a high percentage. So let's just say 4 divided by 152. So it's about 2.6% net profit. So probably in the industry, in the retail industry, makes sense. But you can see that revenues in the past 4 years are growing, and that's what's important. But first factor I look at is, as a consumer, do I use the product? Do I like it? And I'm a huge fan of Costco. I do most of my shopping there. I rarely go anywhere else, even if I'm paying a little bit extra at Costco, but I do it for convenience, not having to stop at several places, just because it's slightly cheaper. I tend to go to Costco and just buy the things that are on sale, knowing that if it's on sale, most likely it's better than anywhere else. And even if it's not, the price difference isn't worth me stopping at different places. So as a consumer, I love Costco. I love the return policy. They make shopping easy. Just the regular shopping experience I enjoy. I don't know how they do it, but I actually enjoy going to Costco and picking things up. And they know how to get you to spend. And I'm not a big spender, but they still know how to get you to spend. Sometimes I feel like it's an accomplishment when I find something on sale and buy it there. I mean, they've got the food court, they've got the tire center, they've got everything. They know how to take care of you. They've got the pharmacy as well. They want you to stay there and do most of your shopping there as well. So their business model is great. As a consumer, I'm really happy. Stock chart looks great. Dividend increase is amazing. Revenues is growing as well. So for that reason, this is definitely a stock that I would buy and hold forever. It's not going anywhere. I'm just disappointed I sold it at 165. Here's another stock that I would gladly hold forever is McDonald's. Once again, as a consumer, I use it. I love it. I like that they always keep up with the trend. I mean, their mobile application is amazing, easy to use. They know how to get you to spend. And once again, I'm not a big spender, but when they have these deals, free burger or free ice cream, I don't know how they get me to buy something with it. Obviously, they're giving away these free items knowing that, since you're there, you might as well just pick something up on the way. And it seems to work. So I like that they know what they're doing. They know how to sell. They know how to market. So they have a proven track record. And something else I really like is if you look at the 2009 crash, that stock didn't crash at all. If we look at 2009 here, let's zoom in. From 2007 to 2009, the stock went up. It didn't crash when the whole market was crashing almost 50%. McDonald's went up from 2007 to 2010. So that's amazing. It's suggesting that it's a crash-proof stock. Dividend as well is increasing year after year. I mean, let's look at 2010, 55 cents to $1.25 in 2020. Market cap 146 billion. Right now, the dividend yield is at 2.59 if you buy it. But if you buy it at this price, but if you caught it in March when it was trading in the 140s, that would have been an amazing dividend yield. Also, knowing that it increases year after year, at least 10% per year. If we look at financials and revenues, 24 billion 2016, 22 billion 2017, 21 billion in 2018, 21 billion in 2019. Last 12 months, 20 billion. So that's not good, actually. Revenues are decreasing, but I still trust the company. It's still something that I would buy and hold forever. I mean, their business model is also amazing because they own the land that the franchises are sitting on. So if the operations isn't doing great, they're still collecting rent from the franchises. So the corporation itself is making a lot of money, even if the franchises are not successful. But of course, if the franchises are not successful, they're not going to last, they're not going to pay rent. But real estate is not lost, so they still own real estate. So their balance sheet is very strong. This is actually a stock that I was thinking of doing covered calls on. I was thinking of buying 100 shares of McDonald's in my RSP and write out of the money weekly covered calls on it as a dividend kicker. But I chose IWM instead, which is an ETF that tracks the Russell 2000 index. So I went with an ETF thinking it would be safer, but definitely I have no problem switching from IWM to McDonald's. This is definitely a stock that I would hold forever, gladly and proudly. Now here's the last stock on my list that I would hold forever. These aren't the only stocks that I would hold forever, but for the purpose of this video, this is the last stock I'm mentioning. So Microsoft is a product that I use and enjoy. They have a proven track record, of course. I love their business model. I like that they're always innovating and keeping up with competition. I mean, there's a lot of software companies out there that come up with great products. And even if it's a product that Microsoft doesn't have, they'll come up with their own version. At some point, it was the biggest market cap on the US stock exchange. Dividend yield right now is at 1%, but increases year after year. 2010 dividend was 13 cents. And right now, dividend's 51 cents. So almost tripled their dividend in 10 years. That's really good. Now, of course, they crashed. They were affected by the 2009 crash. Let's go see. So, yeah, there you go. So from 2008, 2007, from 37 to about 13, 15. So yeah, 50% drop like the rest of the market, but didn't take time to recover, as you could see. Now, the tech bubble obviously affected it, like all the other tech stocks, but I mean, look where it is now. Nowhere close to 2000 numbers. It was trading at 58 in 2000. Right now it's at 187, and it was higher before March 2020 crash. So this is definitely a stock that I would hold forever. And now let's look at their revenues. I'm sure their revenues is ridiculous. Yeah, 85 billion in 2016, 89 billion in 2017, 110 billion in 2018, 125 billion in 2019, and the last 12 months, 138 billion. Just the increases is crazy. From 110 to 89, so 110 divided by 89, that's 23% increase in the revenue. From 125 to 110, a little bit less than 20. 138 to 125, 10% increase. So their increase in revenue is pretty good as well. Let's look at their profits. Yeah, profits growing year after year, except maybe 2018, but still pretty good. I mean, 39 billion profit over 125 billion revenue. That's really high. So here are some other stocks that I would gladly hold forever. So JP Morgan, Walmart, Costco, and Microsoft I mentioned. Apple, although I don't like Apple as a consumer, but I definitely know that it isn't going anywhere. And their business model is very strong. So I don't like Apple, I don't use it, but it's definitely a stock that I could hold forever. American Express, I love. Visa, Coca-Cola, Facebook, of course. Now, Facebook is getting a lot of bad press in the news sometimes, but they always overcome it. And seriously, they created an amazing product that everyone uses. Like it or not, everyone uses it. And I think sometimes even the bad press might be a little bit of jealousy of how successful they are. But their business model is amazing. So yeah, for me, first factor I look at is it has to be a product that I use and like as a consumer, and then I'll start analyzing the company in terms of chart, in terms of dividends, in terms of how it behaves in certain situations, and revenues must be growing year after year as well. But sometimes it's not enough to just buy and hold, because you could go through a 5-year or a 10-year period where there's absolutely no capital appreciation. So that's annoying. I think buying and holding is great, but you need to complement it with something else, like maybe dividends or covered calls. So as long as a company pays dividends or you're able to write covered calls on your position, then definitely buying and holding is a great thing. All right, so if you have any questions, any suggestions as well, leave them in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back depending on your deposit. The other one gives you $50 in free trades regardless of your deposit. And like always, if you enjoyed this video, please click the like button, share with a friend, and subscribe to the channel. Thanks for watching.